Hey everyone, welcome in. Welcome to tonight's live. Today is Sunday, June 9. It is currently 8 p.m. Eastern Standard Time, aka New York session time. So we're going to go over a couple of red folder news coming up for this week. Last week we had NFP week. It was a pretty wild week for us, but some of you traders actually had great positions. Others not so much. Me, I barely traded last week. I only got into probably like 2 trades last week and they all went in my favor, which is very good. Since it was such a crazy week due to NFP, I kind of held my positions pretty short instead of going for the full take profit that I usually do, just so I can lock in some profits, right? I was kind of worried that I was going to have a complete retracement, hit my stop loss, and then I'm back into drawdown. Shout out to Cross, yo, welcome to the live. So yeah, without further ado, let's jump on the Forex Factory calendar. So for this week coming up, we are on Sunday during Asian session. We have Euro red folder news. Doesn't specifically say what time, so I'm going to assume because it doesn't say what time, it's going to be kind of like an all day type of thing, but more likely than not, it's going to affect the London session and New York session greater than the Asian session currently right now, right? We'll see how the price action is right now. Monday, tomorrow, we do see nothing. Tomorrow's a very chill day for us. It's not a bank holiday. It's nothing. It's just yellow folder news. Looks like a chill day. Probably going to range all day. We'll see. We'll see how the price action plays out. Tuesday, we have red folder news. It's going to be the British pound, GBP. Wednesday, we're looking at red folder news for GBP during the London session. We have red folder news CPI for USD 1 hour before the market open. And then we also have FOMC at 2 p.m., right? The afternoon of the New York session for USD. We have it 2 times. We have one at 2 p.m. and one at 2:30. Canadian at 3:15 p.m. Remember, this is New York session time. And then in the evening during Asian session, we're going to see the Aussie dollar. This is all on Wednesday. Wednesday's going to be pretty wild day, so be very careful with the market news, right? Especially if you're trading those Forex pairs. Thursday, what are we looking at? We're looking at 1 hour before the New York session open. USD core PPI 1 hour before we open. JPY with the infamous tentative news red folder Asian session. And Friday, we have another infamous tentative JPY red folder news, followed by half an hour after the New York session open, USD red folder news. Awesome. Now, without further ado, let's jump on the charts. Right now, I'm looking at NQ over here. I am testing out the new indicator from EZAlgo. It's called Market Mind, right? It's like the ultimate indicator when it comes to smart money concepts or ICT concepts, right? As you can see right here in my chart, it automatically draws out like the buy side and sell side liquidity, which is like the halfway point. If I'm ever at this point over here, I'm looking for shorts. If I'm ever at this point over here in the daily, I'm looking for longs, right? So since we are overextended over here, we're looking for shorts on our higher time frame. But we do see here we have a daily fair value gap, right? So let's check this out. I'm going to mark out this daily fair value gap over here. I also have it so when a fair value gap is formed, it highlights that candle, right? Solid fat blue for bullish. Actually change it to green. I'm going to change them to green because I want it to be as obnoxious as possible. So I know that, boom, those are my fair value gaps. And then also, let's see, mitigation method. Whenever it touches into it, and let's make it so it automatically shows my fair value gaps. Yeah, looks pretty good. Touch wicks. Honestly, to me, it's still valid, right? So let's draw this out together. Boom, boom. That area right there, that's going to be our fair value gap, right? We do have this highlighted over here. Let's see. Why is that gray? Give me 1 second, guys. Let's fix this together. This will be gray, and then this will be blue. I should fix it right there. This halfway point, we're going to use a rectangle tool to get a perfect 50%. And then I'm just going to mark that out, right? We're going to use this trend line tool at this halfway point, trying to keep the charts as clean as possible. Move it to the right. And then we're going to color it blue. Blue is bullish. This is at 18,884.50. This is on the NASDAQ. Right? We can also label it as well. Let's see, 1 second. Daily. Fair value gap, 50%. I'll put it on the center. So we're waiting for price action to come back into this area here, tap into here, and then continuation for the next all-time high. Looks like every single week we're hitting a new all-time high when it comes to NAS. So we're going to trade with the trend, right? So higher time frame trend, we are hitting, right, higher highs and higher lows. We are still bullish on the higher time frames. We're still bullish on the weekly and the daily. So I'm looking for bullish positions, right? Even though we're extremely overextended over here, we are still going with the flow, right? So go with the trend. As long as the trend doesn't flip over, then we are still bullish, right? I have a question here in the chat. It says, how do you make it automatically show fair value gaps again? So that's what Market Mind. You have to download Market Mind on the Discord. It's going to pretty much show you on the settings as well. But just for example here, I'm going to show you. And it's going to be over here with a mitigation method. You see order blocks, max order blocks. And then over here as well, it's going to say market structure. This should be blue. For some reason it's like backwards. So this is gray and this is blue. It's going to be right over here with the market structure. We kind of want to focus on external, but we'll leave it at all for now. All right. So we have this daily fair value gap over here, and then we also have another daily fair value gap over here. So as you can see, once price action broke through it, it used that area right there as a support area. And it's pretty cool because I was actually analyzing this on the 15-minute, and I kind of got into that as my entry, right? So that was my entry on Friday actually, where I went into this area here. When price action tapped into that, I went long, and then I set my stop loss underneath this candle body over here to keep me nice and tight. But if you can see it on the 15-minute, once price action breaks through that, it uses that area as support, right? So boom, bullish fair value gap over here, disrespected this, went underneath it, swept this liquidity, and then price action broke through it as an inverted fair value gap, and then it used this as support. Boom, broke through the fair value gap on the daily. Now that area here is support, bounced off it again, and then took off after that point. Like crazy. So we're expecting something similar like that to happen again with this daily fair value gap. We want price action to come, tap into here, and then continue all the way up. Or what price action could do too, if we set a limit order like down here, price action could actually break through this, break down, commit a market structure shift, and then we're bearish. I feel pretty confident that we should be expecting a pullback to this daily fair value gap. And if it continues and breaks through it and closes underneath it on a higher time frame, like let's say like a 4 hour, because we have a 4 hour fair value gap over here. If it breaks through that, then it becomes an inverted. And then it's going to use that level itself as a resistance level. So then we're going to start looking for bearish positions after that. And then this daily fair value gap over here, this has been pretty much disrespected. But I'm going to keep that level there because it's going to become a very important key level for us. Because at that point, once it breaks through it again, it becomes another inverted fair value gap. And then that level is going to be kind of like a support and resistance level. Instead of being a support, it's going to be a resistance level for us. So 4 hour as well, 4 hour, let's mark out this fair value gap over here. This is about the halfway point. We're going to use a trend line. We're going to mark that out and we're going to label that as well. It's going to be 4 hour fair value gap, 50%. But since it's so close to the daily, I'm not even going to use it, right? I'm going to use the daily and I'm just going to update the daily to say 4 hour and daily fair value gap. 4 hour, daily fair value gap, 50% mark. And we're going to be looking for price action to test this out, come right back above it, and then continuation to the upside, or break through that daily fair value gap there, which is bullish, then break through this one, and then that will confirm our market structure shift. And then we're going to be looking for bearish entries, right? So I'm not going to go lower than what we are right now. This is on the daily and the 4 hour. We're looking at this. This is the key level here. And this is kind of like a confirmation, a confluence level over here, okay? But our main focus is going to be this level here, which is at 1884.50. That's what we're going to be looking at. We're going to wait for price action to react off that. All right. We're going to move on to the next pair. It's going to be gold. Gold, I did see something interesting happening, right? So on gold, we're going to see over here, we have this daily fair value gap over here, right? So this daily fair value gap, this one is actually labeled as 4 hour, but it should be a 4 hour and a daily as well. That's going to be a key level for us. Look at where the price action is right now too, right? This is on the daily. This is an order block over here. And usually what I like when order blocks overlap with the fair value gaps. To me, that gives me a beautiful entry because once they overlap, that's where I usually like to go to. And it kind of like stops there too. So something like this, right? This is the low overlap. This is the order block. And then this is the end of the fair value gap. And then it'll look something like that, right? And then target 2 to 1. So something like that. And then this order block overlap with the fair value gap also overlaps with the 0.705, which is part of our OTE fibs, our Fibonacci levels, right? Those are the levels that we want to be entering at. But we also have this Fibonacci level over here too. So boom, right? From this all-time high all the way to where the price action is at right now currently. And then that also overlaps with a 0.705. You also have a 4 hour and a daily fair value gap inside there. So this looks extremely high quality for us. So if price action were to break through this and disrespect this, then it would be seeking this over here. And it'll probably fulfill over here a lot stronger than over here. But this is more like intraday, right? But you also have to be aware of this over here as well. This is a fair value gap. Price action touched into that and then respected it. If you would have gotten into here, right? Tight stop loss, aim 2 to 1. Where you at? Right over there. Boom. It would have tapped into that perfectly. But right over there. So like in 2 days, right? Price action 1 day, 2 day, 3 day. So tapped into it here, and then 2 days later, you tapped into your take profit at 2 to 1 risk to reward. Right? These are on the daily candles. You could have probably sniped a nastier entry on a lower time frame. But pay attention to the key levels, right? Right now we are sitting right underneath here. This is going to be an interesting level for us. I feel like this price action might actually not even be respected. Reason being is because this fair value gap over here has already been mitigated. Price action's already tapped into it and continued on. And now price action actually closed above the halfway point and continued on. But this respected it. This insane news day, right? This was on Friday. Did not break through the fair value gap. Only wicked through it. Respected it. And then look at that massive dump. That's insane. Price action started up here, wicked here, and then dumped like that insanely. That's wild, right? So we did see that happen on Friday. Let's go down into the 4 hour. So for now, this is what we're looking at. 24.8. And then also you want to make sure 2376 is going to be our point of interest right over here, because that's going to be the overlap of the fair value gap and the order block. We want to look into that as our entry. So that coordinate right there is 2375.4. And we're going to label that as OB order block, right? And FEG overlap with 0.705. 3 different confluences right there. If price action breaks through this, right, this is going to be our stop loss. Stop loss is going to be the top of the wick, the market structure. Price action breaks through that, then it's going over here into my 2426 area. And then from there, if it holds, then it'll completely dump. If it doesn't hold, it's going to break through new all-time highs. So be very careful with that. But we're going to be smart with it, right? Don't be over leveraging. Don't risk more than 1 or 2%. Try to be very, very cautious, but that's your backup plan. Price action breaks through here. We re-enter over here. And then if price action breaks through there as well, that's 2 losses for the day. Get the hell out of that trade, right? But this trend looks like it's going well. We are looking for bearish positions. I have another question here on the YouTube. Message retracted. But I did kind of see it, right? So you were asking how I made the red fair value gaps. What I do is I use this rectangle tool up here, select it, go into the settings, and then just pretty much change the color style. The background, you can change it from red, right? Which is right there. You can change it to blue. I like using red and blue when it comes to that. Red is for bearish, blue is for bullish, right? That's how I usually make the fair value gaps. There's also a way to make it so that you can have the halfway point, which is the middle line right over here. So that's how you see the halfway point right there, the 50% mark. Because I have this selected, the middle line. And then I use the dashed line. You can use dotted too, but I like using dashed because the dotted kind of trips me out. But yeah, that's how I use a rectangle tool. So gold, 24.8, and then also for gold, you're looking at 23.75. Those two are points of interest. That's what we're looking for. And then we're going to remove these fibs because you just saw why I marked out the fibs and the confluences behind them as well. This are removed, clean this up a little bit, and we look good. Let's move on to the next pair. Let me see, what is the 4 hour? Before we move on to the next pair, excuse me, let's see the 4 hour. Here is an inverted fair value gap, broke through it, and then use that as a support level, continuation upwards. That's insane, right? Because if you would have taken a long position here and then set the stop loss right there, which is the previous candle low, and then set 2 to 1, boom, next candle less than 4 hours later would have tapped into profit at 2 to 1. If you were to target the market body, the market structure, which is right over here, that's a 3 to 1, same thing. Intraday trade in and out within 4 hours. Pretty wild. It's very important to see these levels developing and try to watch it from a higher time frame point of view. Try to get into it in a lower time frame. So what I like to do is I like to mark out the higher time frame levels, like a daily, 4 hour, and then I'm looking for entries on the 5 minute and the 15 minute. So what do we see over here? I see 2 fair value gaps on the 4 hour. and I see this fair value gap 50% mark, it's almost exactly overlapping with this daily one. So this 4-hour daily order block and fair value gap with a 0 points. And then to verify, right, let's draw our rectangle tool with the 50% mark. And it's almost overlapping it, right? Just a few points off. And that's close enough. Or actually, yeah, it's like right there. Super close to it too. Right, so that gives us another confluence. 1, 2, right? 2 confluences there, 4-hour and daily. The confluence of the overlap with the fair value gap, and then the confluence of the 4-hour 50% mark, like pretty much right over it too. So that's gonna be your confluence, and then it's sitting right beneath this inverted fair value gap. It's insane. So this level is gonna hold. It's gonna hold pretty well. Look at this as your point of entry, right? And then if you can see here too, if we draw the fibs on the lower time frames, this is on the 4-hour. You're gonna see that 0.705 also overlaps over here, even on the 4-hour. So that's a lot of confluences right there. Those are good levels. Set an alert. Set an alert for when price action comes to this level. You already know what to do. And then also set an alert up here, so you know what to do up here as well, just in case. Let's move on to silver, which is a daily and 4-hour on gold. We're moving on to silver now. Right over here, it was ranging, and it looks like price action broke out through here. You are no longer ranging. It looks like you are now, well, yeah, kind of still ranging, right? This is the buy side liquidity. This is the sell side liquidity right over here. Daily fair value gap right there. Tapped into it, right? I did send that alert off inside the Discord. I'll let you guys know that we're at a daily bullish fair value gap. And then price action tapped into it, and it looks like it's moving up. What else do we see on the daily? I don't really have anything else confirmed on the daily. Right? This is the only thing that I have right now on the daily of the price action closest to where our price action is, right? Let's go to 4-hour. What does 4-hour tell me? 4-hour tells me like this bullish fair value gap got inverted into inverted fair value gap. So now this is going to be an area of resistance. Bearish trend, right? Bearish. We're going down. Bearish. Bearish market structure shift over here. And let's draw the fibs. Let's see the overlap. Boom. All three inside the fair value gap. That's nuts. I would probably do my entry right here at the 0.8, which is at 31.19. I like to get those overlaps of the order blocks and the fair value gaps, because to me, that makes it just a much higher quality entry for me. So we're going to set alerts right here. You can even set like a DCA entry. You can do half a position size here at the 0.705, and then the rest at the 31.19, which is the 0.8 line as well. This looks pretty solid, honestly. Tap into that and then dump. This is on the 4-hour. The fact that this fair value gap is so close, it's going to break through that. It's going to completely disrespect that and continuation to the upside. Right? So, delete this Fibonacci. Set your alert. And we can even color it actually. Let's color you. Well, I can't select it, but you know, that's going to be our entry. That's what we're going to be looking at. And then once price action taps into that, we're going to try to short it. So I'm going to set something similar to this. Boom. That's the market structure high. And then target 2 to 1, which is right here at the 50% mark. You can even target down here actually. the market structure, that's going to give you a 3.34. That looks really, really good. This is on the 4 hour right here. Let's lock that in. That's what we're looking for. And then for gold, let's do the same thing. Let's create that. Probably lock that in right there. This is on the 4 hour. And then we'll target... we can target that right there. Halfway point of this fair value gap. Market structure low, which is right over here. Target that. Where's that? Yeah, there's a market structure right over here as well. So let's be a little bit aggressive. We'll leave it right there. That's a 2.32. And that's fine. That's good enough. Lock that in. That's what we're looking at. Euro USD. That's what we're jumping on right now. Jumping on the daily. And it's respecting the trend line perfectly. So try to break out this trend line. We are so extremely bearish on this. And it's doing a lot of different pullbacks on the way down. Broke through over here on the trend line. And then it came right back underneath it again. This is on the daily. What else do we see on the daily? I don't see... Yeah, I see a gap. Fat gap right here. And then you have the fair value gap over here. So fair value gap and then the opening session gap over here as well. Draw my fibs to where we are right now. We should be expecting price action come back into here, test this out, and then continuation to the downside. Will it do it today? I have no idea. But we gotta see what's up with that. The reason I broke out through here was it was targeting these stop losses over here at these equal highs. Boom, boom, boom. Stop loss there. And then do you have anything over here? Yeah. You had stop losses here too, which is seeked. And over here as well. So yeah, it was just pretty much collecting liquidity before dumping. So we're gonna just go with the flow. This, I'm gonna mark it out like that. That looks good enough for me. And then that's like the market session. That's like the market level right there. The market structure level, excuse me. So that's what I'm looking at. I'm looking at this level over here. I'm gonna send an alert. That level is 1.08690. This is on the daily. On the 4 hour, what do we see on the 4 hour? 4 hour, we see the exact same thing. Order block over here, overlapping with that. This is the entry here. It might actually go up a little bit further up, right to the 0.8. 0.8 is overlapping with the order block and the fair value gap entry. So to be a little bit more aggressive, we're gonna move that there. And now that 2.3 ratio is a 5 to 1, which is nuts, honestly. So entry levels that you're looking at right now, 1.08890, and then also at the 0.75, this level here, 1.08745. That's what you're looking at right there. Let's move on to GBP. GBP, bro. What do we see on the daily? Boom, 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 boom. Pull back up. And now we're trying to come right back down again. How are we doing this? We have a daily fair value gap over here. We're going to mark that out. Make sure that's highlighted perfectly. We're going to color it red as well. Make sure this is at the exact level that it needs to be. And then this, it really depends how the candle closes for today, right? We still have 20 hours for this daily candle to close. So it might even close above it, which mitigates the fair value gap entirely. But we do have this over here, which we're expecting price action to come back down. And that's more on the weekly. Yeah, that's a weekly time frame right there. So in order to get down here, we need this price action to reject up here. This is not closed out completely, so I'm not going to mark it out because it's not an official fair value gap. We have to see how price action develops. Let's look at this on the 4 hour. On the 4 hour, we do see a fair value gap. We're going to mark that out. Halfway point is about here. Color you red. Label you 2. 4 hour fair value gap, 50% mark right there. And then when you drop the Fibonacci, you're looking at something like that. So this actually might dump a little bit more. Probably tap into this trend line here. At this little intersection, tap into the sell side liquidity. And then, right, gonna be like right there. Maybe a little bit lower to this sell side liquidity. And then that overlap will be created. So we gotta watch it. You gotta watch this to see what's going on. But for now, we're trying to look into this fair value gap over here, 50% mark. We want price action to tap into this, and then on like the 5 and 15 minute time frame, we're gonna look for a market structure shift bearish and enter that, and then follow it down. So it might actually develop around here, and then we'll follow it down, and then it'll tap into our weekly levels. Moving on to JPY. JPY right now, we are on a massive downtrend, but damn, what the hell happened to me? Oh, I forgot to set limit orders. That's what it was. So we've been watching this for what, 2-3 weeks now. So these are the levels we've been watching for a while. Yeah, getting into a retracement. So right here on the daily, I marked this out. It hit this level here, the 0.62, and it also maybe did it. Missed the 0.705 by just a little bit, but it did hit the 0.62 level. And then its continuation to the downside. So this we can pretty much mark as mitigated because it's already tapped into it. Let's lock that. And then as you can see right there, that looks like that. And then we're targeting 2 to 1 or the negative 0.27, which should be like 3 point something, 2.34. But that's already been tapped into and mitigated. That looks like that price action is already moving down in our favor. Let's see what we can see on the 4 hour. 4 hour, we might get another entry. So let's check this out. Boom. Right there. We can use this, right? So let's go through this halfway point here. As you can see here too, like this level here, looks like a lot of resistance. So it's bouncing off it until it finally like broke through it. So that's pretty good for our price action. Mark out the halfway point over here. This halfway point is at 0.00642110. Label this. And then it's a 4 hour bearish fair value gap, 50% mark. We're going to look at that level right there. Set your alerts for a point of entry for a bearish position. Besides that, I'm not really comfortable getting into it anywhere else. This might actually continue without even pulling back. We'll see how the price action develops throughout the day tomorrow. And let's go to the DXY. This is crazy because according to the dollar should have just like, yeah, the dollar is pumping, right? Right now, it just broke through another fair value gap over here. This was like a daily fair value gap that became an inverted, right? Price action was bouncing off it, shattered through it, closed underneath it, and then broke right through it. Now this level here is going to become an important level of support for us. But when you see NASDAQ as well, see NASDAQ is going up as well too. So dollar's going up, NASDAQ is going up. I don't like that at all. Right? Not a really nice correlation. I don't like the way it's moving. I was expecting NASDAQ to continue dumping as the dollar was pumping. But we're going to play them out as they are for now. And as you can see, DXY is very bullish. So your DXY pairs be very bullish on USD. But who knows, right? This week we have some interesting market news. But that's what the DXY looks like. Looks like DXY is going to take off, continue upwards, use this level over here, which was a fair value gap, as a support after it became an inverted twice. Now it's going to use that as support, tap into that, continuation upwards. So just keep an eye on that, right? DXY is still pretty bullish. And that's pretty much it. Thank you everyone for joining me on this Sunday night live. Make sure to watch this again if you do not understand, if I was going a little bit too fast. That's the good thing about having this uploaded on YouTube. You can watch it as many times as you want. Take a look at those points of interest. Make sure to mark down your alerts on your TradingView charts. So that way when price action comes into those levels, you already know what to do. Also, quick tip, whenever you're setting your alerts, make sure to also label the alerts, right? Sometimes I set too many different alerts and I kind of forget why I put them, right? So make sure to put, hey, when price action gets to here, I am looking for a long. And then that way when the alert goes off, it'll say, when price action comes to here, I'm looking for a long, right? Just for an example, you can make it say whatever you want, but just make sure to label your alerts. So whenever price action comes to those alerts, to those points of interest, you already know what time's up. Well, thank you everyone. Have a great trading week. Have a great profitable trading week. Be very careful with red folder news. See you here, same time, same place, every Sunday night. Take care and goodbye for now.